Before we talk six-figure price tags, let's cover the basics. Pi Network is a cryptocurrency you mine on your phone. No expensive computers, no technical know-how. Just download the app, tap a button daily, and you're earning Pi coins. Started by Stanford grads, Pi's mission is to make crypto accessible to everyone, not just techies or investors. Tens of millions of pioneers are accumulating Pi, waiting for the day it has real-world value. Right now, Pi is stuck in the app. You can't sell it on exchanges, but you can trade it for goods and services within the Pi ecosystem. The project is in an enclosed mainnet phase, building a real economy before opening up to the wider market. The big question, will all this tapping ever pay off? Here's where things get wild. The Global Consensus Value, or GCV, a concept that's shaking up how we think about digital money. Unlike Bitcoin, whose price is set by open market trading and constant speculation, GCV is a value declared and agreed upon by the Pi community, $159 per coin, a number chosen to reflect both ambition and unity. The idea is simple but radical. If enough people agree and actually transact at this price, that value starts to take on a life of its own, becoming more than just a number on a screen. In Pi's peer-to-peer marketplace, goods and services are listed using this high valuation. Imagine a $31 t-shirt selling for just 0.001 Pi, or a cup of coffee for a fraction of a coin. This creates a new kind of economy, where value is determined by collective agreement. The ultimate goal is to build a closed economy where this value becomes the standard for all transactions, setting the stage for a new financial ecosystem. GCV is rooted in the belief that all money, whether digital or physical, is based on shared trust and collective belief. If millions of people agree on a value and use it, that's what gives it power. It's a bold attempt to shift value creation away from traditional markets and put it directly in the hands of the people, challenging the old rules of economics. But the big question remains, can a price set by a community truly survive when it meets the realities of the outside world, where skepticism and competition are everywhere? That's the experiment Pi is running right now, testing whether belief and consensus can create lasting value in a digital age. The world is watching, let's see how it plays out. Why 314,159? Beyond the clever Pi reference, GCV supporters argue a high starting value prevents wealth inequality and market manipulation. If Pi launched at a penny, early adopters could hoard massive amounts, repeating old financial patterns. By making even tiny fractions valuable, the theory goes, wealth stays distributed and everyday purchases are possible. The dream is to attract big-ticket transactions, cars, real estate, luxury goods, not just coffee. If businesses see a community holding a valuable currency, they might join in, reinforcing the price. It's a self-fulfilling prophecy. If everyone believes, maybe it works. But it all hinges on collective faith holding strong. To grasp how radical GCV is, compare it to the rest of crypto. Bitcoin, Ethereum, and most coins are priced by open market trading. Buyers and sellers set the value every second. GCV flips this. The community sets the price by decree, refusing to sell below their chosen value. The hope? If enough people hold the line, the world will have to accept their price. But what happens when Pi finally hits exchanges? Market traders will likely value it much lower, setting up a collision between belief and reality. Will the community's consensus hold, or will market forces win? This is one of the biggest unknowns in crypto today. The outcome could redefine how digital money works, or end in disappointment. What sets Pi apart? Accessibility. Anyone with a smartphone can join. No technical barriers, no expensive gear. This has led to tens of millions of users worldwide, creating a powerful network effect. The more people who use a currency, the more useful it becomes. Pi's slow, cautious rollout frustrates some, but the team insists it's about building real utility before opening to the market. Unlike most crypto projects, Pi focuses on community and real-world use, not just speculation. The referral system and security circles encourage organic growth and trust. Critics call it multi-level marketing, but it's built a massive, engaged user base. Pi's unique blend of accessibility, scale, and social design makes it a crypto experiment like no other. For every Pi believer, there's a skeptic calling it a scam or a waste of time. The debate is fierce, and the uncertainty is real. While some see Pi as the next big thing in crypto, others warn that it could be nothing more than a digital mirage, luring people in with promises that may never materialize. The biggest risk? As of now, Pi has no real market value. You can't cash out. No matter how many coins you've mined, they're stuck in your app, with no way to convert them into dollars, euros, or any other currency. This leaves users in limbo, waiting for a future that may or may not arrive. The GCV, or Global Consensus Value, is based on belief, not actual market demand or proven technology. It's a number agreed upon by the community, not by buyers and sellers in a real marketplace. This makes Pi's value highly speculative and potentially unstable. If Pi ever opens to exchanges, a rush to sell could crash the price instantly. Imagine millions of users trying to cash out at once. The value could plummet in seconds, wiping out years of mining effort. There are also serious concerns about transparency and centralization. The core team controls everything, unlike Bitcoin's open-source model where anyone can review the code. This lack of openness makes it hard to trust the project's intentions and future direction. Slow development and the absence of open code raise red flags for many in the crypto world. Updates are infrequent, and the community is often left in the dark about what's really happening behind the scenes. Regulatory risk is huge. Governments may crack down on a network this big, especially if it claims trillions in value. Legal uncertainty could freeze assets or even shut down the project overnight. Questions about legality, privacy, and compliance could derail the project. Without clear answers, users are left exposed to potential legal and financial consequences. These aren't minor issues. They're existential threats that could determine whether Pi succeeds or fails. Anyone considering Pi needs to weigh these risks carefully, do their own research, and be prepared for any outcome. In the world of crypto, caution is just as important as optimism. Pi Network has split the crypto world in two. On one side, the believers, millions tapping daily, seeing Pi as a shot at a fairer financial system. For many, especially in underserved regions, Pi is hope, a no-cost lottery ticket that could change lives. They see critics as gatekeepers trying to protect the old system. On the other side, the doubters, crypto veterans and analysts who see Pi as hype with little substance. They point to closed code, slow progress, and question the real utility. To them, the GCV is pure fantasy, and they predict a price crash if Pi ever hits the open market. Some call it a social experiment, others a potential scheme. This clash of visions makes Pi one of the most polarizing projects in crypto. The truth? Only time will tell who's right. So, what's next for Pi? The big moment is the move from enclosed mainnet to open mainnet, when Pi could finally be traded on exchanges. This will test whether the community can hold the GCV, or if market forces will drive the price down. The Pi core team's strategy during this transition will be crucial. Will they try to stabilize the price, or let the market decide? Real utility is key. If people can actually use Pi for goods and services, it stands a chance. Without utility, it risks becoming just another speculative token. Pi raises big questions. Can millions will a currency's value into existence? Or is it just wishful thinking? The road ahead is risky, but fascinating. All we can do is watch, stay informed, and see where this experiment leads.